Hello friends, my name is Ramasu. Today we shall discuss about topic the evolution of banking industry. Friend, today's topic is very interesting, especially if you have interest in banking industry, fintech, and you want to learn about it. So let's start, friend. Friend, today we shall discuss in detail that how a banking industry is evaluated and what is the historical development of banking systems and practices from their early origins to the modern digital era which now we have seen. The evolution has been shaped by economics, technological and regulatory changes over the centuries and centuries. Friend, first is the ancient and medieval banking, which is from 2000 BCE to 1500 CE. Friend, in ancient times, people engaged in barter trade, exchanging goods and services directly. As trade expanded, commodity money like precious metals emerged as a medium of exchange. Friend, we know about it that in the ancient times people were exchanging the goods with each other. For example, in the ancient times, if I have a bag of a rice and you have a bag of a wheat, so we can exchange these bags accordingly as per our needs and as per our requirement. So this is basically this is called as the exchanging of goods, and this is basically the first thing which was basically the basis at which the trade started. Ancient civilizations such as Mesopotamians and Greeks had early banking practices, including money lending and the use of promissory notes. The Roman Empire established the concept of banking houses as well. This is very interesting, friend, that the Roman Empire was so much well aware that they have the first, you can say, they have established first the concept of banking houses in their empire. Also, they have basically started the notes concept in their empire as well. Then when medieval banking and renaissance, 500 to 1500 CE. Friend, during the Middle Ages, European banking flourished. Italian city states like Florence and Venice were hubs of banking activities. The Medici family played a significant role in banking and finance here as well. So from here, the banking concepts are arranging, they are evaluating, and merchants used bills of exchange to facilitate long distance trade. These bills evolved into early forms of banking instruments here as well. So you can notice that the bills nowadays which we are using, like the merchant bills, so these bills were also there at the time of 500 to 1500 CE. So at that time, the basis of the bills and banking industry were established at that moment as well. The rise of modern banking, 1500 to 1800 CE. So friend, in 1694, the establishment of the Bank of England marked a significant milestone. It was the first central bank providing stability to the English financial system and influencing the development of modern banking. So it was the first ever bank established in 1694. It was established and it was flourished at that time. Then banks began using fractional reserve banking, allowing them to lend more money than they held in reserves. This practice increased the money supply but also introduced the risk of bank runs as well. Like for example, they start the concept that you need money, then you can take the money from the bank as well. So bank is basically lending the money, like they are giving the money on basically the concept of loan, like they are giving started the giving the loans to the people here as well. So from here the concept of loan started. Then 19th century innovations and global expansion, that is 1800 to 1900 CE. Friend, here banking expanded globally during the 19th century with the establishment of banks in America, Asia, and Africa. The gold standard became the basis for international trade here as well. So, from first bank was established in England, then other banks like America, Asia, Africa, etc. So these banks will start opening in different regions here as well. So from this era, basically the banking industry established more actually. So the industrial revolution led to increased demand for capital, prompting the growth of commercial and investment banks. Innovations like checks, banknotes became more widespread from here. Like people start using checks and banknotes. Like for example, if you need money, so I can give you a check and you can withdraw the money accordingly from the bank here as well. Banknotes also become widely used here in the era as well. 20th century technology and regulation 1900 to 2000. Friend, the mid 20th century saw the introduction of electronic banking with the advent of credit cards and ATMs. These technologies revolutionized customer access to funds and payment methods here as well. So from here, from the 20th century, you can see that major improvement in the banking industry was there. Like for especially the credit cards and ATMs, like people start using these ATMs. You have seen like ATM machines are there in on the streets, and you can withdraw the money from the ATM. You can have the transaction using the credit cards. Then deregulation and globalization means the regulatory changes in the later half of the 20th century, such as the repeal of the Glass-Steagall Act, led to increased competition and globalization within the banking industry here as well. So many changes are there, like the evolution is there and the globalization is there. Then friend, digital era, which is from 2000 to present, like the 21st century witnessed the progression of online banking, allowing customers to access accounts, transfer funds, and conduct transactions electronically here as well. The widespread adoption of smartphones has fueled the growth of mobile banking. Additionally, the rise of fintech financial technology companies has introduced innovative solutions challenging traditional banking models here as well. So this is the era in which we can say a major improvement, major enhancement is there. Then technologies like blockchain underpinning cryptocurrencies such as Bitcoin have introduced decentralized and secure methods of transferring value, influencing discussions around the future of banking.